For young people, it's a gift. It's a true gift.
Yes.
I'm 56 and I'm 100% allocated to this, but I have savings and income and houses. I've got all of the stuff, right? So I can afford to take the risk. If you're not, you better get pretty familiar with the cycle. And it's the business cycle. It's the same cycle we've always looked at. So it's nothing unusual. Yes, it's driven by the credit cycle. Yes, it's every 4 years right now because of the debt refi cycle, but it's the same cycle. Unfucking your future is taking advantage of what are two massive secular trends playing out in front of us and saying, these will get me there because they actually go up in value faster than the debasement. It's playing into the two biggest trends we've ever had, which is the trend of technology and another technology, which is cryptocurrency, blockchain.
Raoul Pal underscores that the financial markets operate in predictable cycles, largely driven by the credit cycle. These cycles occur roughly every 4 years due to the debt refinancing process, making it essential for investors to understand and navigate them wisely. By comprehending these cycles, individuals can significantly reduce portfolio volatility and optimize investment returns. Drawing from his own experience, Pal shares a crucial lesson: trying to time the market is often futile. Many investors fall into the trap of selling at market highs with the intention of buying back at lower prices, only to find themselves hesitating due to fear and uncertainty. This hesitation leads to underallocation, causing investors to chase price rallies instead of capitalizing on market dips. Instead of attempting to time every peak and trough, Pal advocates for a more consistent approach, holding investments through cycles while continuously adding during market corrections. This strategy allows investors to maintain long-term exposure to high-growth assets without being shaken out by short-term volatility.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So if you can navigate, and that's the work that you do, the work that I do and stuff like that, if you can navigate the cycle, we can dampen your volatility significantly. And that's our job, to try and help you do that. I think it's suboptimal, actually. Jeff Bezos didn't trade around his shares according to the cycle. What you really should be doing is focusing on your investment side and then increasing as much income as you can to then buy the sell-offs when they come, because you're back at all-time highs well before the market is. Often, I've also found that, particularly in things like crypto, where returns become very fast and very large. Let's say you take off money. Let's say you've managed to turn your portfolio into there's $1 million, and you sell it at the high, and I'm gonna buy it at the low. I guarantee you will not put that $1 million back in, even though you've told yourself you're going to, because you're scared. And so what you do is you then under-allocate and you chase it all the way up, waiting for the correction. It's like, this is the way to the madhouse. So the last cycle, I just kept my money in and said, I'm not going to do anything except add. And I added, and my P&L was all-time highs. People found it very difficult to deal with. This time around, because I've got certain things I want to do, I will take some lifestyle chips off. And probably earlier in the year, and then later in the year, and then the rest I will keep running, because this process is not going away. And so it's the gift, and I don't want to not be involved in the greatest macro risk-taking opportunity of all time, but I want to take some lifestyle chips off. And people need to understand where they are in their needs, how aggressive they need to be, where they are in their goals, and these things. So look, it's not a straightforward process. How do you navigate the most unprecedented change humanity will ever go through? Simply is be as safe and secure as you can be. And so I think 5 years, this 5 years is the time to ultra focus on getting as many lifestyle chips. And that, money accesses your lifestyle chips, but lifestyle chips means a roof over your head. It means the ability to make decisions and have some economic freedoms. So you can observe the creative destruction of the exponential age without feeling threatened by it. So it's a very serious message. It also plays into the other message that I use a lot, which is how to unfuck your future. Because if you go to the average 30-year-old, they can't afford a house. They're starting to think about having kids, or the millennials at 35 are having kids. They don't know how they're going to afford that. Asset prices, because of debasement, keep going up in value versus income. And so they don't have the same abilities as I did, or more extreme, my parents did, or your parents did. So they're looking at this thinking, am I going to be able to participate in an economy like this and have Maslow's hierarchy of needs met? Am I going to have a roof over my head? And so unfucking your future is taking advantage of what are two massive secular trends playing out in front of us and saying, these will get me there because they actually go up in value faster than the debasement. It's playing into the two biggest trends we've ever had, which is the trend of technology and another technology, which is cryptocurrency, blockchain. Right? Blockchain currently is the fastest adoption of any technology the world's ever seen, and it's been the best performing asset class in all recorded history. It still does like 100% plus returns, just Bitcoin alone. That's la land for regular investors. Yes, it comes with volatility. So that's how to unfuck your future plays into this economic singularity moment, this 5-year period that I talk so much about. Okay, what can governments do to support those people? And is that going to be inflationary? Usually it is. And if it's going to have to be via the money printer to pay for it, well, then we've got the same problem we've still been having, which is asset inflation.
Oh, yeah, 100%.
And so I think that probably continues until economic growth starts going crazy to the upside, which I think it will happen. But again, you're raising the same issue, is like, who does that money go to? And how do we distribute that? Because my God, we're in a scary world if it just goes to like OpenAI and 4 other companies. They become the most powerful things the world has ever seen. It's like the Dutch East India Company squared, It's like, these are country state, giant country states in their own right. So yeah, I don't know, Darius, and this will be a political battle. But how inflationary can it be if it's just labor that is driving up some goods? We've got a shrinking population, and then we've got all other forms of costs falling.
Yeah.
So it could counterbalance. Maybe there's a shift that we get a larger share of the capital somehow, but it's not clear how that's going to happen, which is scary, which is why, again, go back to the 5 years thing, is you better get your shit sorted out as fast as possible, because humans don't do very well with really rapid, gigantic change.
The recent acceleration of AI, particularly with OpenAI's models, exemplifies this phenomenon. AI's intelligence level has skyrocketed from an IQ of 90 to 157 within a year, with projections indicating that AI will surpass the intelligence of every human who has ever lived within the next few years. This technological acceleration has profound implications. Knowledge, once scarce and valuable, is rapidly becoming abundant and free. The introduction of advanced AI models capable of producing high-level research in seconds is revolutionizing industries and democratizing information access. However, Pal warns that this shift could also create extreme economic imbalances, concentrating power in the hands of a few dominant corporations.
So the exponential age is basically something I started writing about maybe 4 years ago, where I started saying, listen, I think there's going to be this nexus of technologies that all hit adoption effect at the same time. And unlike normal kind of Metcalfe's law, which tends to be exponential, this is going to be Reed's law, which is an exponential squared, because of all of these things are building on top of each other. The internet already exists. And what you're going to get is robotics, AI, a change in what we do with energy. We're going to see genetic sciences, space travel. All these things are all going to happen. And even I did not think that this was going to happen at the speed of which we're seeing it.
Wow.
So when we look at what's just happened in politics, the technologists in a coup have taken over the White House. So we have Elon Musk, David Sachs, everybody from Vivek to JD Vance to Mark Andreessen, and they're all part of this administration, either in the front door or through the back door, right? So we're about to hyper accelerate here. And what we're seeing with AI is, again, I did not believe this. Last year, beginning of the year, that when you measure IQ, which is not a perfect way of looking at it, but the IQ of the OpenAI model at the time was 90. It finished the year at 157.
Wow. Very high.
Okay, so we are now very high.
Yeah.
So if we are assuming we will double pretty much every year, by next year, it will be more intelligent than any human who's ever lived. Then after that, you're starting to get to more intelligent than all humans added together, which is where you start to get to with ASI.
Yeah.
So this is where we're starting to see, there's a model that got released by, and you probably haven't even seen it yet, called Deep Research, that was launched by OpenAI yesterday. It's a research agent. You put in a simple prompt like, write to me as if it's a Harvard PhD paper on the importance of the business cycle and how it plays into game theory. Something like a small prompt. It will do you a 10,000 word PhD with all of its references in 20 seconds. Okay, so we're now headed into a world where knowledge is starting to become like water. It becomes free. Because this, you talked about the other model, the DeepSeek model, right? It's just making knowledge cheaper, and that flywheel is going to keep happening. So we've turned one of the scarcest things, something that you and I have made our careers from, which is our knowledge is valuable, to it's all going to zero over time. So it is a enormous disruption it's a civilization level disruption to how things work. Doesn't mean it's the end of civilization. It just means we've got a very fast, biggest change we've ever had in humanity.
Pal acknowledges the challenges posed by this rapid transformation, particularly regarding wealth distribution and economic equality. If technological advancements disproportionately benefit a small group of entities, such as OpenAI, Tesla, or other tech giants, the global economy could face severe disparities. He compares this potential outcome to historical monopolies, likening it to the Dutch East India Company squared.